All right, hello and welcome to another episode of Wealthy Expat. This week I've got Darren Bennett on the show with me from DCBM. Darren, it's great to have you on the show and thank you for joining us.
Thanks a lot, Chris. Very much appreciated.
Great to have you here. So this week I wanted to, dig into a bit about the do's and don'ts of property investing in a sense. You've got a lot of experience of international markets, global markets, having worked in Dubai and Hong Kong, London, and now you're in beautiful South America. You lucky man, or Caribbean, actually, is it?
Yeah.
So you're making a lot of Australians stuck at home at the moment and stuck in Australia, very jealous, I'm sure. But before we dig into it, why don't we talk a little bit about your background and where you've come from and understand your kind of your story, your journey to where you've got to where you are today, in a sense.
Yeah, fantastic. Thanks a lot, Chris. So I've been in property almost 10 years now, 9-10 years, predominantly investment background. So working for investment agencies, predominantly selling, to the Middle East market, Asian market as well. The main focus has been the UK. I did that. I've sort of run companies and switched over into working for sort of small niche developers. That we're sort of doing, new build conversions, anything up to sort of 150, 200 units at a time. And then really sort of about 3.5 years ago, took the plunge and decided to basically do it for ourselves. And we've been doing that ever since, really. So we have a property management company in the UK that, it's not an estate agency or letting agency. It is, we do focus on the management side of it. Really advising overseas and expat clients that are buying and need help in the UK. Is a big market. There is just not enough agents, unfortunately, that really take the care to look after these to look after these clients. So that has been set up for just over a year now and has expanded really well. But our main business of what we do is we act as a buyer's agent. So in simple forms, what that means is a client pays us a fee, gives us a shopping list, and we go and find it for them. And our general, average client, I would say, is looking to build up a portfolio of properties, moving towards pension. So they're sort of single apartments, houses that they're looking to keep adding. And it's a very different approach because, as being from the investment background, you're always paid by the developer to sell. You're always incentivized there. Whereas we are, we're retained by our buyer. So it's a very consultative approach. It's a very different avenue of looking at it. But it's been a business that is, thankfully, touch wood, has grown, and we've never had to really advertise. It's all been through word of mouth. And it's something that's been doing extremely well. So our main market that we're focusing on is clients from the Middle East and the expat community there. And it's been gradually growing ever since.
That's good. How are you finding things in the UK at the moment? Obviously, there's been a lot of talk about property prices running mad. And when's it going to stop? And I think London finally, for the first time in 12 months, has finally seen a slight decline in property prices. I think they're down about 1.5% this month. But how are you finding things on, dealing with these clients internationally? Are they recognizing this? I'm sure they are, but what's really been their view or your view?
Well, it's been a challenging sort of 18 months, and even longer. We've got the whole Brexit situation that's was announced, and the whole prolonged negotiations, and still, I expect some sort of kickback on that. Simple things like delivery of raw materials to developers is having still a knock-on effect. And then obviously, we've got the big C that's come along with COVID, and that's caused issues for lenders, for surveyors. Lenders have chopped and changed their rates, and so it's been a very difficult couple of years. But I think generally, if you take the approach of property and look at it in a long term, then how we've been able to help clients and the clients that have used us have been able to really take advantage of that. There is a challenge at the moment. It's I suppose it is more of a seller's market than a buyer's market. Sellers are in the prime position at the moment. People are willing to overpay for stock just to enter into that market. And,
of course,
we've seen it with some of the big pension companies, the big pension funds, they are willing to pay sort of top price for either completed developments or to forward funds. So yeah, it's been a challenge. Thankfully, we've been able to help our clients still negotiate some discount on every single purchase, although some is not as much as others, but it's been a challenge. But all round, prices haven't dropped. So, in relatively good terms, it's a bonus for everybody.
Considering considering what's happened and how it is still lingering in the background, we've done surprisingly well. We've managed to get through it okay. In terms of stock that you are working on at the moment, or deals that you work on at the moment, is there a sweet spot in a sense, or a price point that you guys focus on, or is it a bit of everything?
It's a little bit of everything. I'd say sort of 70 to 80% of our market is taken up by the sort of 150 to 250 price range. This is generally what clients are instructing us on. So I'd say it's more the lower to mid range. These are, like I said, expats or locals within that region who have got anything from sort of let's call it 40 to 80,000 pounds that they want to allocate per property. So we're generally looking at regional markets. And the other sort of 20% ish of our deals is taken up either by smaller blocks, anything up to 15, 20 units, freehold. So a client coming in and buying that whole block. And we do occasionally the London opportunities as well. We've got some high net worths that are buying in sort of the Mayfair, Soho, but it's far and few between. Our speciality is that sort of regional market.
Definitely. That's interesting. I guess you've still probably got people taking advantage of the stamp duty holiday that is in play up to that 250 grand at the moment.
Yeah. But we've also seen it, I think, realistically, for those clients that are looking for their money to work a little bit better for them, the regional markets offer a lot more opportunity in that sense. If you're buying in London, the yields are somewhat considerably lower than in your regional markets. And the great thing for our clients is that we offer a complete A to Z of services. So, even though we're looking in the regional markets, we can advise our client on the rental demand in that, because we're often managing properties in those cities as well. So we're able to offer a lot more to a client than, maybe an investment company or an estate agent says, look, buy here. They can't necessarily offer that service to follow through with it.
Sure. So, I think especially in the UK is an interesting one when it comes to investing companies, and a lot of cowboys in the market, a lot of people trying to make a quick buck and not, like you were saying, not doing their research properly, not analyzing the areas and watching these rental growths and the demands for the area, population increases, employment and the work. So just skipping past it in a sense. But interesting to know. I guess we'll dig into the bones of the conversation a little bit now. And you working internationally and in different markets, dealing with clients around the world, and more so UK expats. And I understand it's slightly different to the Australian way in which it works. But when you're dealing with clients at the moment and, guiding them through this process, helping them acquire their investment property or a home that they will one day move back into, have you got, before you start that process, in a sense, are there any fear points or, issues that you like to tackle before we get into the investing, in a sense, things to be cautious of, in a sense?
Well, look, I think, I'd say a good 70% of the clients that we speak to have previously had conversation with what we'll call broadly investment agents. There is a lot of there's a lot of opportunity out there that's dressed up quite nicely, and things like rental guarantees, contributions towards stamp duty, legal fees, free furniture packs. The UK market has seen it all, and they've also seen a lot of alternative investments. You can invest into co-working spaces or car parking spaces, or even funeral spaces, burial spaces. So it's a market that's seen it all. And what we try to do is we try to bring it back to the basic of, you're investing into a residential property. Of course, there is commercial, industrial, retail. We don't really get involved in that. We focus just on the residential. So we bring it back to the basic, and we strip it all back, and we look at the simplistic approach of, you're going to buy a property, you've got a tenant living in there, take away all of this added extra of the rental guarantees. We manage it for you. We know exactly what the demand is. We know what rents can be achieved. So that's the sort of first point there, is really for clients to understand that and understand how we are different to an investment agent. We don't just send property out. It's very much on an instruction basis.
Okay.
I think the next hurdle is really mortgages. It's a big problem. It's a big hurdle that people have to get over. There's no way around it. If you want to borrow, you've got to work with these banks, and often there's a lot of documents that got to be sent, and there's a lot of AML that needs to be done. But it is one of those things that you've kind of got to bite the bullet on and do it. And you know, especially in the UK, lenders are, you know, if you're a first-time investor, most of my clients are, they don't necessarily have their own residential property. You know, if you're buying a new build and you're buying it off plan, in the UK, it can be more tricky to get a mortgage compared to a second-hand property. So again, it's making the client aware of this, understanding the risks that if you're going to buy a new build, maybe you're not going to get the best rates. If you're going to buy something off plan, you've got the risk there of maybe getting a mortgage in 12, 18 months time. So again, 95% of our clients, I would say nearly 100% of them, all want completed property. They want to generate the income straight away. So, you know, we're lucky. We work with a very, very good mortgage broker, and they have access to all of those lenders that can really get sort of the best rates for them. So I think those two work hand in hand there. And, you know, it's important for clients. You know, you don't want to be buying a property and then realizing you can't get a mortgage.
Exactly. Kind of destroys your hopes and dreams, your aspirations straight away. No, that's interesting. I think, like you're saying, having that, I think you touched on with the mortgage team and having your solicitors and conveyancers on board as well, just having a good team around you. I think that's a very important part of the process, and especially when buying overseas.
It's something that people take for granted. You know, you're whether you're buying in the UK or anywhere else in the world, you could be sat over the other side of the world and you can speak to a company about buying a property, and then you can really be left alone to do it all, which some people like, and they think, well, maybe this company's not really getting me the best service, or I'm going to go and try and do it all myself. And, you know, it can be really challenging. You know, we've got property in the UK, and you know, we obviously realize we're fortunate we have a management company, but even before that, we would never try and manage the property ourselves. Of course, there is landlords that do it, and we understand why they do it. But you know, I think you need to use if you can find them, you need to use the professional services around you to really, you know, guide you,
take advantage.
Exactly.
Definitely. No, I agree with that. I guess just talking a bit more about the process in a sense. And I remember when we did some work together in the past, or some small work together, we were working on some projects in Birmingham and Leeds and where else, Manchester, Liverpool and London. But we, at the time, the process was very, you know, you put in your reservation, I think it was £2,000 or £5,000 reservation fee at the time. And then you had 28 days to pay the 10% deposit, and then you paid nothing until completion. And that's when your mortgage kicked in and started working essentially. So is the process still in the current market the same on the new build stuff that is coming to market in the UK? Do you know?
Yeah, I mean, if you want to take that approach of buying off plan, then ultimately, you know, every developer wants some form of commitment. So, you know, whether it's, you know, £1,000, £2,000, £5,000, whatever it may be, you know, they want you to reserve that to have some commitment. They'll then want you to exchange. So whether that is 5, 10, 15 or 20%. Generally, solicitors now, because of the pressure that they're getting from their authorities above them, they're not authorized to act on anything more than 20%. So, you know, again, a developer will want that form of commitment, and then I suppose you've then got that payment on completion, and this is sometimes where it can be tricky in the UK, because obviously we know as the market's moving, lenders' requirements are always changing, so mortgages can change. And the process when you buy secondhand property and the approach that we take is completely different. You know, we're acting for buyers that are generally on a secondhand property. So, you know, there's no real formal commitment or reservation fee there. You know, if we find a property for a client, we're getting a deal agreed with that agent, with that seller. And then that's it. You go through the process with the solicitors, and obviously you then find out if there's any problems with the building or any problems with the property. So it's a very different approach. And both of them offer opportunities. Some clients love to buy new build because there is should be no maintenance or issues or anything like that. And obviously some clients love to buy secondhand property. So
it's interesting.
Just depends on the approach that you take.
So. No, interesting. That's a good answer. I guess for the next question, and this is quite a broad question, I guess there's really no wrong or right answer with it in a sense, touch wood. But to you, when you're considering a deal at the moment and you're working on behalf of a client, is there certain criteria in the sense that you like to tick off, almost the fundamentals of, what makes a good deal to an investor that you may be working on or working with at the moment?
Yeah, so there's a few things. Obviously, most of my clients are driven by yield. So ultimately, we need to look at what the property is renting for. And ultimately, that comes down to the return is based on what it's being sold for. So there is a lot of overpriced property in the market at the moment. We've got to remove all of this, and we've got to find, and it can be difficult sometimes, we've got to find genuine, even market value properties, or ideally below market value. So those two things are essential. And the next two, which is something that we will not compromise on at all, is the charge of ground rent and the cost of service charge and the lease length, those three. So generally we don't allow, or we don't work with any property that is under a 250-year lease. There is exceptions to this where the client knows about it, the fact that they can buy something with a short lease. They can negotiate with the freeholder. So for anyone that doesn't know, that's effectively the company or the person that owns the whole building or the land. And then you can look to increase your lease. But there has been a problem recently with lenders now not wanting to lend on any property where the ground rent exceeds 0.1% of the cost of the property. So to make it super simple, if a property is £200,000, your ground rent should not be more than £200 a year. And that's something that, again, if we find an opportunity and that's not the case, we will advise the client, we will let them know on it, and we will give our reasons as to why we think this is a concern. And obviously we've taken that advice from solicitors, and they can obviously share that advice. So again, it comes down to the discretion of that client, but we would make them aware of that. And service charge is another one really that we're very careful about, because service charge is ultimately a maintenance fee that should be there just to cover the running costs of the building. It shouldn't be extra money for the freeholder to make. And sometimes you see with some of these buildings, you can see £3,000, £4,000, £5,000 a year service charge. Now in London, that may be okay, but if you're buying something in Manchester or Birmingham, for example, £3,000 a year for service charge when there is no concierge or gym or restaurant or swimming pool, it's just excessive. So again, this is something that we need to be very, very careful on. And really, this is what we do for the client. We spend hours researching all of this, looking through various properties to get rid of all of this, to get rid of all of these properties that just don't fit the criteria. So so that's kind of, on the one end, it's about finding something that stacks up, and then secondly, it's the kind of the ongoing maintenance and
interesting
everything that comes with it. So
I guess another question that can lead on with from this one is, have you noticed, I guess, a shift in popularity in terms of areas in the UK? Have you started to notice more inquiry for, say, Birmingham with HS2 going in? And I know it's been in talks for years and years now, but are people starting to act on that being developed, or is there a shift for Leeds or further north in a sense as well? Have you seen a migration change?
We have. I mean, in Asia in particular, there's obviously different buyers' requirements, but generally, because of the BNO visa program out in Asia, a lot of clients now are looking into houses rather than apartments. So they're looking at relocating effectively, and they want that space. And they're also very attached to major cities with good universities. So Oxford, Cambridge is still pulling power over these clients as well. We still see the usual suspects of Manchester, Birmingham, Liverpool, Leeds, but it's also broken down into demographics, you know. So for example, Kuwait, you know, we do a lot of business in Kuwait. They have a very particular attachment to houses and apartments in Milton Keynes.
That's right.
Very unusual place. But there is an attachment to that. And again, they also are still attracted to central London. You know, not all clients, but, you know, not to be too generic, but there is certain demographics that are attached to certain areas. But of course, the rise of the Midlands and the Northwest has increased substantially compared to 6-7 years ago. Of course, you know, we're seeing more clients, we're seeing more pension funds, larger institutions all open now to regional markets and take good approach to it, which is fantastic for the whole of the UK.
Definitely. It's interesting how it's spread out across kind of different regions, geographical regions. The Asia or the Southeast Asian crowd one area and Middle East another. Strange how it works. I guess it comes down to the mentality that they're instilled in their area, in a sense, what the media must portray to them, or the news that they must hear about certain parts of the UK.
This is where it works really well for us, because, you know, a client comes with a preconception of what they want, and, you know, if they ask for our advice and our opinion, of course we can guide them, but generally they've got that for a reason. Now, whether it might be, like I said, their children you know, going to university, or whether it may be that they are eventually looking to relocate, or maybe they've got some family or friends that have bought there that have done really well. And this is why we can take such a different approach to, you know, what we call the investment companies, because we don't have a bias towards any particular location. Of course, we can advise on some that rent better than others because we have that experience. But it is very interesting. You know, you can be speaking to a client in Kuwait that says, you know, I want a house in Milton Keynes. And then you speak to a client in Dubai that says, you know, I want an apartment in Manchester city centre because I know it because of Manchester United. And it sounds crazy to think this, but there is certain cities that have a great attraction to investors in different areas. So it's good, and no, I mean, I know a lot of people say this, but generally no 2 days are the same, because, you know, we deal with so many different clients, such a diverse requirement. So it's definitely interesting.
It's good. I guess that the one about Manchester United and people wanting Manchester, I always find that an interesting one. I guess having such a reach, global audience in a sense, but it draws so many people to Manchester from international audiences.
Absolutely. So you've got the likes of Manchester, you've got Liverpool, you know, they've both done really well. And if you compare football, you know, it sounds silly, but if you look at it from a football perspective, Birmingham doesn't have the same attraction as a Manchester and Liverpool. So certain demographics maybe don't have that excitement with a city because of that. So again, sometimes that's down to education, and that's where, if they want our advice, we will always help them with that, you know, to let them know that Birmingham is not just about a football club, but actually there's a huge amount of regeneration going on there. Probably one of the largest government regeneration programs ever to happen. But, you know, there is that process that we go through with those clients. So
that's good to know. Good to know. I guess the next question, and this is, we have kind of touched on it briefly throughout, but if there was going to be, I guess, 1 or 2 points that you thought, you know, would make, or that are going to make the process as simple and seamless and straightforward as possible, you know, what would they be? Even if it's from having the team around you, having the support around you, whatever it may be, but what would be your recommendation to a new client that you were going to take on, for example? And I feel like I'm interviewing you now, but if you know, if you were going to take someone on, and just to make their life easier, make it a seamless process, what would be kind of your tip for that?
I think there's 2 things here. The first thing is don't be drawn in by all the bells and the whistles of, you know, rental guarantees and all these added extras that some people throw in. There's always a reason why they're putting that in, and, you know, generally if you do your homework and you take it all the way, you've really got to look at the numbers of, you know, what's the demand like? Is it going to rent for those figures? And the property that I'm buying, is actually worth that amount? And now in the UK, it's very easy, man. Just a very quick search on on some of the portals, you know, Rightmove and Zoopla, can quickly identify if you are getting something that is market value or if in fact you are overpaying for it. So I think that is probably, you know, one of the most important. And the second thing, which it can be taken for granted, but I think it's about knowing what you really want. You've got to identify what you're trying to achieve from the investment, and what your goal is really. You know, what do you want out of this? What are you planning to do? And what's the medium to long-term goal here? And it's not about just buying a property for the sake of it. Sometimes you've got to have a bit of an idea behind it of what your plan is moving forward. So I think when we work with a client and they understand both of these, it certainly makes our life a lot easier because we're able to advise them. You know, we obviously go into a lot more detail, but, you know, getting these two is key. You know, and we're fully transparent with every client that we work with. You know, we'll look at the rentals and say, look, this is what we can achieve. Go and have a look elsewhere. Go and speak to other agents. You know, and I think the transparency, the honesty is key in the market at the moment. Definitely.
I agree. I think that's some good points around the research and then having the transparency as well. But also knowing what you want, because a lot of people do come in, you know, and they want massive capital growth and they also want massive rental yields, and sometimes it's just not achievable. So I think it's having a plan set out for what you want to achieve financially, or if, you know, in the case of an investment, what you want to achieve financially, and think long term as well. I think a lot of people come in thinking market's really hot, we can make a quick buck in 2 or 3 years and get out. And don't get me wrong, you probably could at the moment, but I think it's thinking more long term, thinking more 10 years down the track and looking, reevaluating the situation. And I always remember the story that you told us back in the old days about your mother buying her property and then drawing the equity from that property and refinancing and starting again, in a sense. And I don't know why, but it always stuck with me, that story. And
you know what, it's been a strategy that's worked for so many investors. And, you know, just to touch on that for anybody that is looking into that, you know, for many, I think for expats, it's quite a good example here. You know, you've been based in the UK for maybe 10, 15 years. You've been offered a job in, you know, a different part of the world. And generally you've got this property that you've lived in, you and your family have lived in. Now you've got two options here. You either sell it and use that money for your new life, you know, to maybe buy something. But often with a lot of expats that move, they don't know how long they're moving for. So they'll often keep that property in the UK as a bit of safe haven. And generally what they end up doing is just renting it out. And they've got dead capital there. So this property they might have bought 10 years ago for, I don't know, 100,000, 200,000. They could be sitting on a gold mine there of, you know, 500,000, in some cases £1 million property. And look, it's very easy just to have that mortgage free and not have any, what we call debt to it. But actually, you know, that's a pot there that you can utilize. It's an asset that you can utilize. You can draw equity from it, and you can use that equity to then build a portfolio. And so what we did is exactly that. My family, they had a sort of relocation, but still within the UK. We started to rent the main residential property. We drew equity out of it, but we didn't go aggressive. We only drew 50% out of it. And from that 50%, we've been able to now build a portfolio, and it was at a nice size. We've since increased it, and it's done really well. And, you know, we've gone from, you know, bringing in originally sort of £1,200 to sort of now over 4,000 without having to do anything, just through remortgaging. You know, we still have what is called as debt. You know, we have mortgages, but of course they are paid off, or they're being paid by the tenants that we have in place. So it's a real good opportunity there. And I think there's a lot of clients out there, expats, British expats, that are in the same situation. So
that's an interesting one. I think it's a lot of people need to consider it. Like you said, you could be sitting on a gold mine, and a lot of people don't understand. You know, when I first started property, it was hearing this stuff, it was going over my head, like I had just no clue what was going on. But when you sit down and deconstruct it now and just look at the numbers and pull it apart, it makes a lot of sense. So speaking to the right people is a big part of that. But it's interesting to know nonetheless. I guess final question, and this is a question that I like to ask a lot of, or every guest that comes on the show, and it's more of a generic question. Slightly corny, you could say, but we'll see what sort of answer you can give. But what does a wealthy life mean to you?
I think it's freedom of time, to be fair. I think it's, again, without sounding cheesy, it's something that everybody has, but we don't always utilize it, do we? I think everybody wants spare time, not to the sense that you want to be bored, but you want to be financially free. You want to be able to do what you want to do. So I think the freedom of time is important.
I think it's a good answer. I think it's right. Look at you now. Where are you at the moment? The Bahamas?
No, so we're in Panama at the moment.
Panama, that's right.
Just to give a little bit more context to that, I have a team still back in the UK. I was living in Dubai for just over a year and a half. We looked at expanding our business there of the agency. But actually what I ended up doing is still doing Zoom calls with clients, because we have clients kind of everywhere, and Dubai is quite an expensive place, great for networking. But my partner has a contract in Panama. And so we're in Panama now. We are, I suppose, taking advantage of the remote working, but all of our team is remote working, and our business has grown strength to strength. We still can meet clients, either, with people that we have in different regions, or we can do the old, the situation here that we're doing, which is Zoom.
Exactly.
It's to take advantage of the conditions that we're in at the moment. Yeah. And, it's good.
I think it'll be interesting to see how a lot of these companies now handle these, I guess, changed working lifestyles, in the sense now you can work almost anywhere in the world, as long as you're doing your work during the Monday to Friday and at 9 to 5. Absolutely. But it could be situated anywhere. So I think we'll see these co-working spaces.
There's still a lot of people that nothing beats an old-fashioned face-to-face meeting. Of course, it's fantastic. You get a different perspective from somebody. It's fantastic. But I also think it depends on what industry you're in. Some of us are extremely lucky to be able to pick up our business and go anywhere in the world. And obviously others, they have to be situated in, the location that they work. So I think businesses have to adapt to that, just talking in terms of, recruitment of staff. You can't, it's not one approach fits all anymore. Staff want different things. They want flexibility, they want this kind of freedom. And as a business owner, you've got you've got two choices. You either accept it or you don't. That's and you true. Stick to the old approach, and you might not get the best talent. So you've got to be open-minded to that.
It's true. So, that is a good way of looking at it.
Well, look at yourself. You're working for an Australian company in the UK, so
it's working perfectly.
Exactly.
We're some perfect examples of how it's changing and evolving now. So, But Darren, it's been great to have you on the show today. I've really appreciated having you. For everyone listening, don't forget to like, comment, and subscribe. I hope you've got some value out of today's conversation. And if